All right, it's going to be a short video. This is for Monday, June 23rd. Got some setups going here, but for now, let's do a quick check as far as what the markets are doing. Looking at the daily chart, the Dow, or ticker symbol DIA, and you can see here within all these lines here that we closed back about above the 5-day moving average here. And make sure I have it set. Okay, right now I have it at 8 days. So 5 to 8 days. Right now it's on the 8th day. So that means the trend is turning positive as shown on the RSI 2, meaning that now we got the green dots right here. So that tells me we have a setup. If we can close higher, then DIA could possibly go up higher. Now, one thing here I was just noticing right now is while I was setting this up is we might have a bigger inverse head and shoulder. Originally, I had a small one here, the shoulder, the head, and then another shoulder with a price target up, as you can see right here. And we're kind of halfway there. But at the same time, I'm starting to see that we have this shoulder, this bigger head, and another shoulder here. If this is truly a head and shoulder here, we measure from the bottom here to the top of here, which will give us a bigger head and shoulders further up. So just something to watch. I'll keep an eye on it and maybe go over it in the next future videos. Anyway, let's go down to the SPY here. And you can see on the SPY, we also closed above the 8-day moving average as well, so the trend can possibly have shifted over. We got the green dot here, meaning we have a setup. So if we can close higher tomorrow, then that gives me the follow-through day, which we may be heading up higher. Based on this here, we may be right up on this range, but we'll take one day at a time. If it does reverse, we get that reversal Tuesday. It sometimes happens. We'll probably head down to this gap fill here at 567. Looking at the Qs, kind of the same thing. It just broke right above the 8-day moving average. And if it continues up, we have this trend line that it's going to hit resistance. Otherwise, if we get that reversal Tuesday, we can probably head down to around the 499 area. And then finally, let's look at the small caps here. This one here, we have the head and shoulders still in play. We broke out right over here. So we took a measured move. And this is our target right up here. And actually, let me just mark that right now. So there's our target, 247. Now it's probably not going to happen all in one shot. So it's just going to be just a matter of time that we could get up in that area unless we close back below the 199 area, and then that'll avoid out this head and shoulder pattern. But right now it's still in play. Okay, I do have some setups here. Let's pull up some setups that came up. It was a whole bunch of them, as you could see right here. But these are the top candidates here that I like the best. So let's just look at a few of them here. CMP. I like this one here because it's above average. As far as volume on this candle move up, it broke above the VWAP as well. So we're looking at a 12% gain with a 5% risk here. So that's one of them. AS. I like this one here because the RSI 5 dipped below the 30 down in this area. Plus we have a small bullish divergence. Price action went down while the RSI 5 continued up higher. So this may be trading up higher. Put a stop loss right below this candle here, or the most recent low. It's just a few percentages away. And then just put in your ATRs. And as far as to calculate, we probably get somewhere between 2 ATRs or 3 ATRs, depending how strong the move is. That'll be your zone right up here, just to give you an idea On the move, we could go anywhere from 6% to 9%. And let's just do the risk here just real quick. I'm going to go below the candle setup, candle as I call it. And let's just measure it from the bottom here. So we're risking approximately 3.6% to make 9%. So that's a pretty good risk to reward ratio. Next one is CRWD. I like this one here because we got the setup as well on the RSI 2. We got also the dip below the 50 on the RSI 5. And we have an outside day or an engulfing candle here. So if this breaks up, then we definitely could go up higher, especially if the market is positive. So we can go all the way up to 3 ATRs. And to be conservative, we could say maybe around 2 in this case. And it's just basically the same thing as far as measuring. You measure from the bottom to the 9.5, or to be conservative, around 5.9 to 9.5 area. Now as a risk, because this is a bigger candle, we're looking at a 3.26% move on this. So let's just put at the bottom of this here, and let's see what kind of risk is here. There's two ways to handle this. You got a 6.5, which is still within the reason. Normally don't want to go over 8. Another way to do it too is you get the Fibonacci and you measure the distance, and you want to go no lower than the 61, which I think I got it the other way around. So let's just flip this around. Take that out. Go from the bottom to the top, that is. There we go. And oops. Grab this line here. That's the one. Go to the 6.1 right there. You could make that if it closes below the 61.8. And let's get that measured move. So you could reduce it down to 3.7%. That's even better. Based on this engulfing candle, it shouldn't pull back too far down. And if the momentum has actually did shift as it's indicating here, then it shouldn't stop us out on this case and head up to the 9%. EWP, which is basically an ETF for Spain. I like this because of three things here. We got the RSI 5 below the 30, which we got it right there under the 30. We got an engulfing candle here and a bullish divergence as well. We got the RSI 5 making higher lows, while the candle action made a slight lower low here. Now, as far as the kind of move, let's just throw that in. And since it's an ETF, you know, the move is not that much as far as the up move, so we'll just put one here, and we'll put one here. So that's two ATRs, 3 ATRs, and we're going to put our stop. Got to always have your exit plan, and we put it right there. Turn the ATRs off, and we could just take our measured moves here. Let's start with the upside, and we can go anywhere from anywhere between 2%, 2.8 to 3, almost 3.5% gain. And the risk will be about approximately 2% here. So you're risking 2% to make 3.5, or if you use that Fibonacci, which is probably be the slightly low below the halfway mark here. Let's just eyeball it here, just sort of go 2/3 here. We could say 1.3%. Okay, this is kind of a safe conservative move, but the important thing is if you see it closing below here, get out and just take your loss. It's okay to be wrong, as long as you keep playing this game and hitting your targets here, you'll make out better in the long run. Okay, IDV. Okay, what I like about this one here, we got the RSI 5 that dipped below the 30. You can see it right over here. And you could almost say we got a divergence here, pretty much flat right at the bottom here while the price action went slightly down. Okay, and the upside of it here, so we could all do it together. You know, this doesn't seem to be a very volatile. Okay, the reason being is because I'm just looking at this, and this is the ETF. Let's put it at the bottom here, and let's put our risk to reward. Let's see, we're risking, 1.2 versus 2.8. Okay, so there's your 2-to-1 reward here. Once you get up here, there's two ways to play it. You could either sell all of it and get out and wait for the next trade, or sell half of it and just put in either a 9 or a 10 EMA trailing stop. In this case, that yellow line. Let me turn off the 8 so you can see it. This guy here. And as it goes up here, if you get a close below it, you get out. That simple. And IMPUY. I like this one because we got a bullish divergence forming here. We did get the dip, so we go with that. And oh, look at that. That one looks like it has a bigger take profit area. Let's just check it out. All of these stuff is kind of all, we're doing this on the fly. And you can see how I do with all of this. Okay, there's two ways. You could put it at the bottom of the dip or the candle here. Since there's not too much of a difference, I'm just going to go at the bottom of the dip here. Or actually, just go with the candle. Because if the momentum's here, it shouldn't trigger out. And then we just go with the trade here. Seems like this one's going to be a little bit bigger. The wrong one. Go with the price range. Okay. The risk is approximately 6.5%, which is within my threshold. And the reward is going to be approximately 8.6 to 14%. Okay, that's also 2-to-1. That is great. That's within my trading strategy. We'll go for that. And the next one, RBRK. And again, RSI dipped under the 30 mark, which right over here, we got the divergence, bullish divergence. Okay, the only thing here that if I had to say negative, we got the 20. But on something like this, it might just blast right through, especially if the market is positive tomorrow. Or may trade sideways a couple of days and then blast through here, as long as it doesn't close lower than the proposed stop loss, which will be right there. Let's put in the ATRs. There's the 2, ATR 2, and let's put the 3. Turn the ATRs so you can see better. And the risk here, we're risking 6% to make approximately around 7.7 all the way to a 12.5% right there. Again, that's a good risk to reward. And got 3 more. Okay, so we got this as a bullish divergence for REVG, and you got the setup on this one here. It didn't dip below the 50 too much. It just kind of tagged it. Actually, if I'm reading this right here, it dipped down to 49.7, and this one 49.3. So technically, it did dip below the 50. This is what is one of the things that is required for me to consider this as a swing trade. Just kind of like a rubber band. I just want to make sure the band gets stretched at least to a minimum of right 50 or below. And we put the bottom of here for the stop. And we put the 2 ATR right in place, like so. And again, this is the bullish divergence. That's what makes this a good candidate compared to all the other ones. And let's check this out here. 4.2 versus our reward. It's either going to be 4.8 or as much as 7.99. We'll say 8. So you got a 2-to-1 ratio as well with this one here. Looking at PL. Okay, this one here. Besides the normal green dot here, followed by the red. And the RSI 5 dipping below the 50. This one's RSI 14, which is kind of the bigger trend. And I try to make sure this is above either the 50 or sometimes the 40, because if you look at the weekly, there's usually about a 10%, not 10%, but a 10-point difference on the daily. It would say 50, and you switch over to the weekly, it would be like 40. So as long as or the other way around, the opposite, this, well, let's just try it right now just to be, okay, here we go. The weekly, it's 61 above the 50, which is one of the criterias to qualify. The weekly has to be positive, which is 61. And if we go down to the daily here, it's 63. So it qualifies both ways here. Anyway, let's put the stop down here and put our stop loss. Gone over this several times, so you guys probably already know this by heart. Turn this off, and we put in our risk to reward. This one's going to probably be a little higher. Let's move this out of the way so we can read it. Okay, this one's 9.7. Okay, that's going to be a little bit more than what I normally look for. So, but the good thing, it's an engulfing candle. So 11.9 all the way to possibly the 18%. Okay, now what we could do here is we could do the Fibonacci and try to minimize our risk from the bottom to the top of that candle here, and go down to the 61.8. If I can get right there. Yep, right there. All right. So that's one technique to do. Take that off. There we go. And let's adjust from 9%. We're now risking 6%, which is now within my 8% rule here. So that is very good. So almost 7% to get 18%. I like that. That's a lot better. And finally, the last one, PUK. Also, we got an engulfing. So let's take a look at that. Let's just zoom in a little bit on this so we could see. And this is pretty much looks like a harami here. Oh, excuse me, a Marabuzo. So we got the bottom of here. Turn our ATRs. Got a price target of up here for the 3. Let's take a look at the 2. Because this way, depending on how the candle action is developing up here, you know, as long as you're in that zone, then you could, feel happy and says, okay, at least I made it this far. Don't want to be greedy, and you either take some profits or get out, rather than trying to wait and try to get every little penny all the way up here and just see it just pull back. So, okay, so let's just final one here. Let's see what kind of risk we're looking at. We're looking at approximately, okay, that's not bad. It's about a 2.2% risk with a, okay, 2 ATRs at 3.1, and going to the top, which is out of the screen, 4.7. Okay, this is pretty conservative. Still 2 to 1. Okay. But if any of the other ones with the bigger risk to reward pops up, probably take those over these here. So, I'll just pick up 2 or 3 of any of these stocks that trigger before the end of the day again. And I'm going to put this here. So to remind you guys, if you buy, you want to buy it if it closes above this area, not when it gets above the price action gets above, but at the end of the day, when you start seeing it close and it's above that area, then that is the confirmation to get in. Okay, because lots of times in the morning, the first half of the day, you're going to see it way up here, and then the last half of the day, or like down to the last half hour, it's back down underneath, and it just traps all these buyers in here. So that's one of the things to minimize is, remember, the amateurs come in the morning and the professionals come in the afternoon, and so you want to wait until the professionals come in to show, and they will show you their hand as what they're really thinking. If they really like this price action, the professionals then would continue to buy or keep it green here. Now in this case, because you got it engulfing, this is a very bullish pattern. So on this case here, if you do see it moving up higher, then I would understand as far as jumping in right away. Otherwise, if it wasn't engulfing, then I would say wait, definitely near the end of the day. All right, so those are the setups. I know I've kind of gone a little longer than I expected, but I'll try these out and have a great week. And if I see any more, I'll let you guys know. Bye.